All right, here we go. This is Stanislaus and San Joaquin housing market update. This is for end of year of 2025, Stanislaus and San Joaquin, both counties. So we're going to dive into it. So very similar to what we saw last year. It was a repeat where we saw a lot of volatility in the market. Not as crazy as say up and down, but we saw an up. And by around midsummer, we saw prices peak, and then the last quarter of the year, we saw prices pull back due to the season. So we expected that. We talked about it at the beginning of the year. We didn't know if we were going to end up plus or negative for the year, even though it looked like we were going to end up positive quite a bit by summer. We gave a lot of that back. Similar to what we saw in 2020, 2023, 2024, and now again in 2025. So prices have literally been unchanged over the last 3.5 years. They peaked in 2022, and today they're about the same amount. But there's been volatility. Well, it matters if you're selling in the summer or spring versus the fall and winter. If you're running comparables and looking at prices when you're listing your property in November and December, when prices are coming back and pulling back a little bit, it's going to matter. So if you're a buyer, that's going to matter as well. So we're expecting similar this year. The only difference is rates. The rates seem to be coming down a bit more now. So we might see activity come up and see prices go up midsummer and then see us give some of that back. How much? We don't know. But let's take a look to see what the market looked like for 2025. So we'll just cover what we traditionally cover, starting with inventory levels. You see inventory levels, 601 properties on the market in Stanislaus County versus last year. You see a seasonal pullback in listings. You see the peak around that summertime. This is a highlight. Interest rates down at 6.1%. We're hoping, and what it looks like, this is going to be what we're going to see through the year. So rates actually, as of I believe it was the end of last week, we're at 5.9. So that's a good sign because most of the year we traded at high sixes for the year. So if we start seeing rates in high fives, that's going to stimulate the market and you'll see movement of prices. And who knows, maybe you see the price appreciation that we get all the way from spring to summer stay and sustain all the way to the end of the year. But, the year will tell us. So same thing here for San Joaquin County, 1,000 listings on the market versus last year. So we have more listings on the market. Interest rates are slightly lower. Days on market for Stanislaus County is 56 days on the market versus what it was a year ago, which is 42 days on the market. So it is taking longer to sell properties. This market is not giving you much grace. So you have to price well. The property needs to show well. A lot of that is because, like you saw, the rates have been in the mid to high sixes. So buyers' affordability has been squeezed, which means the house has to be in good condition in order for a buyer to feel comfortable enough to move forward. They are also negotiating a bit. So sellers are getting about 96% of the original list price. And Stanislaus or San Joaquin County, they're getting 95% of the original list price, and their days on the market is 60. So very similar to Stanislaus County, but as you can see, slower than last year. Now, rates are lower, so we'll see how that's going to play out as we go into as we continue into 2026. So the next really 3 market updates is really going to set the pace for the year. As far as median price, so this is where we have to kind of double click on. So as you can see here in 2025, we peaked at 9.4% price appreciation by summer. We ended the year at 460. We were at 505, and we kept that all the way to August, just to give that back at the last quarter of the year, which is interesting because when this peaked, the rates were about 6.8%. So people that were transacting here were moving the price here, and now we're at 6.1, 5.9. So we'll see how that plays out. According to the National Association of Realtors, they're expecting a 1 to 3% appreciation. They expected that last year. We actually ended up -1. 2024, we ended up -0.6. The peak price was at 485, which was 2022. Just as you can see, 23, 24, 25, going into 26, 3.5 years where prices have been relatively unchanged. I bet that by the middle of the summer, which would be year 4 of 2026 from 2022, we'll probably test, if not break, the 505 price point. So it's interesting. That's where it becomes a bit more tactical to sell property, how you price it, when you price it based on the market, what you do on the property, and knowing that what you do to the property and knowing what the market tells you and how it responds to your pricing and the condition of your house. When it comes down to San Joaquin County, they're at 532, very similar. Their peak price were these two this month right here, which was at 586, they ended up at 532. Peak price was up 6.1% just to end up 1.5% lower. Last year, they were up almost 2%. But again, record high was 592 in 2022, 568. And then in 2023, they were at 550, 592 in 2024. And in 2025, they ended up at 586. So again, 586 versus 592, very similar story. The big difference is interest rates. So The rates in 2022 were at 7.8, 23, 7.1, 24, 7.2. As you can see in 25, about 6.8, and we're starting off at 6.1, and we're expecting a couple more cuts, so we're at 5.9. If the rate stays under 6, we will see this again repeat, but we might not give some of those prices back towards the end of the year. So the time will tell. With months of inventory, again, as we go into over 3 months of inventory, it starts becoming more of a buyer's market. But we pulled back a bit here. But we saw it last year as well at 2.1. We really got to check this line of resistance here at 2.6 months. If we go over that, does it stay up over that? Do we end up at 3 to 4 months of inventory? Once it goes to 3 to 4 months of inventory, it is a buyer's market. Buyers have more room to negotiate. As you guys could see, we're at 3 months of inventory, and they're negotiating down about 4% of the purchase price. In San Joaquin County, they're sitting at 2.4. Their support line here, their trend line is 2.9. So if they bust through this resistance line, they might end up in that 3 to 6 months of inventory. So we'll keep an eye on that and then kind of advise you kind of as we go. Here's what we're talking about with the interest rates. You see here the peak, and now the rates are starting to come down here. So we did see a slight come down here, and then they went back up. So there was an administration change. There's a lot going on. We'll see what happens this year. The Fed's saying they're going to keep the rates under 6. We will see if that's true. But this is going to be a big indicator. If there's a new product that gets introduced to the market, like a 40-year mortgage, 50-year mortgage, that's going to have a direct impact. There is some new regs that are coming in where big institutional buyers cannot buy single-family homes. That's also going to help as well. But right now, it's all about affordability. Even though the prices have been relatively unchanged, and look, it's going to be 4 years where prices have stayed the same, but we've seen peaks of 9% just to give it all back. That makes it challenging if you're a seller. It also makes it challenging if you're a buyer. So like I said in the email, this is one of those markets where you can't be reactive. You can't even be responsive. You got to be predictive. Now, we have 4 years to see what the market's going to be doing. So we need to advise you on what to expect as you go month by month, depending if you're looking to make a move in the springtime, summertime, fall time, or wintertime. So hopefully this was helpful for you guys. It seems to be lining up as an exciting 2026, very similar to the 2019 market. Rates are slightly under 6% right now. Inventory is healthy. Months of inventory is about 2.5 months. Median price is healthy, so we'll see that run up through the spring and summertime. We'll keep you updated as we get information, but that is the update for the end of year. I know it's not super exciting. You're not seeing appreciation. You're not seeing prices come down like crazy, which is a good thing. It just means that it's breathing. The market is breathing, and it's allowing buyers and sellers to transact. As rates go down, you will see it get a bit more oxygen, and we'll see the market move a bit more. So we'll keep you updated month by month, but if there's anything that you need, if you want a free market evaluation, click on the link above, and somebody in our team will send you a market evaluation for your home. If you're looking to buy or just want to buyer consultation, reach out again to somebody on our team. We can sit down to you and break all these trends down so you could use them to your advantage. Until next month, Daniel Del Rio, happy house hunting.